As an investor, you always want to invest at a reasonable price in a growing company. However, it is hard to find a great company at the right price. But we found Bloom Energy, a company with the potential exceeding the current price. Hi, judges and investors. My name is Rong Hao.
I'm Declan. We're researchers from the Odaish International School.
We recommend you buy Bloom Energy stocks, which is traded at $24.15 per share in 31st of March. However, we believe its stock price can reach $37.14 per share, which is a 53.8% upside. The market underestimated its earning potential and future opportunities, which will be further presented. Now, what is Bloom Energy? Bloom Energy is a leading renewable energy company creating electricity generators that was founded in 2001 and had its IPO in 2018. It currently has 17,719 employees with headquarters in San Jose. Our breakdown of its 2021 revenue. They had total revenue of $972.2 million, with sale of the product at 68% of the revenue, 14.8% attributed to service, 9.9% attributed to installation, and 7.4% attributed to electricity. 62% of revenue comes from the domestic market, while 38% is generated from the international market. Its non-GAAP operating expenses increased from $190 million to $250 million. Marketing expenses increased the most to 28%. The rest are used for research and development, as well as general and administrative.
Bloom Energy's main product is micropower grid, which is a solid oxide fuel cell that produces electricity without any combustion and transfers it through the underground pipes. The power grids also contain the feature of isolating and capturing carbon dioxide. It is unique and much more secure and sustainable than other existing alternative products. It has entered both the energy market and the marine market, which shows its diversified use. There is a huge competition in the renewable energy industry. In 2020, it is estimated that the market value is $881 billion, and it is projected to be continuously growing. There is a high barrier to entering industry. There are not many big suppliers for the renewable energy industry, which means they are unchangeable. Governments are slowly shifting towards renewable energy, as the graph shows. From 1995 to 2020, the renewable energy generation in the world has increased from 1,000 terawatts per hour to 7,000 terawatts per hour, and still show a trend in growth. One more powerful substitute of the industry is the regular energy industry, or fossil fuels. Bloom Energy's products are targeted at companies. This lets the company use more capital to improve their product, which is one of the most important aspects in this industry. Furthermore, they have 22 business partners, with some known ones such as Ecom Energy, Titan Energy, and Market Grid. Their distribution chain is zero. They sell their products directly to companies from their website. This means that there are no middlemen that increases their price margins. The brand image of Bloom Energy is also good. Their products are known to have long durability since they can be used and maintained at the same time. They are also known to have efficient products since big firms such as Apple and PayPal are willing to pay $9,000 per minute for their products. The good brand image also puts Bloom Energy in a more competitive position. The products of Bloom Energy are stable. There is a 24/7 remote monitoring, and they deliver 24/7 on-site power. Furthermore, it is one of the most innovative in the industry due to its zero CO2e emissions. They also have many major achievements which draw trust from their investors. This includes powering the first green hydrogen microgrid in India, won the Global Energy Award, and has been subsidized by several countries.
Our first investment thesis covers the improvements in revenue streams. First, from 2017 to 2021, Bloom Energy's total revenue increased by 166% and is forecasted to grow by 16% from 2021 to 2022. This is due to the decrease in the price of its product. So with more products installed, more electricity can be generated. Since electricity has higher customer loyalty and the gross profit margin, Bloom Energy's long-term profitability will improve. We can also see 24% improvement in overall gross profit margin from 2017 to 2021. This is led by significant improvement in the gross profit margin of service and electricity, and improved gross profit margin for the product from 2018 to 2021. Furthermore, the least profitable revenue stream, service and installation, decreased from 26.6% of total revenue to 24.5% of total revenue. This illustrated an improved selection of revenue streams.
Our second investment thesis, there is an increasing reliance on renewable energy. With climate change being a global issue, governments are forced into action. The regular energy industry is known to emit one of the largest proportions of CO2e. This leads the government to subsidize renewable energy sectors. So Bloom Energy is subsidized by multiple governments, which motivates them to improve products in the future.
Bloom Energy is expected to grow due to three major catalysts. The first one is the development of a new product, which is Bloom Electrolyzer. It is said to be more efficient than alkaline fuel cells, with efficiency up to 70%. Furthermore, it can reduce 28% of cost, with double the capacity of the product, with a 99% availability to companies. The second catalyst for growth is 2022 financial earnings release. Bloom Energy is expected to make $1.15 billion of revenue for 2022, with a gross profit margin of 24% and operating margin to be positive by the first time as 1%. Additionally, the effectiveness of various strategies for each product to increase its total revenue to expand the market can also be verified. The Russia-Ukraine conflict is the third direct catalyst. Due to the war, oil and natural gas prices increased by 69.26% and 127.96% respectively due to declined supplies. This will force customers to use cheaper renewable energy. Now, let's check the finances. Gross profit margin, 20.3%. Operating margin improved by 20% throughout the years and reached negative 10%. From 2020 to 2021, EBITDA margin improved to negative 6.3%. Regarding its efficiency, its asset turnover ratio of 0.61 is slightly below the industry average, yet higher than many of its competitors. The inventory turnover ratio of 5.4 is higher than the industry average, which shows its effective management of its product. In the last 4 years, Bloom Energy has the lowest receivable turnover ratio in 2021, which is 8. This shows loosened credit policy correlates with revenue growth. For solvency, Bloom Energy has an interest coverage ratio of negative 1.8 due to negative EBIT. Debt to equity ratio is 612.8, but it is improving. Total debt to total asset ratio increased to 65.06, yet long-term debt to asset ratio is only 0.62, which proves that are mainly from the current debt. These ratios show Bloom Energy's long-term financial burden. In terms of liquidity, current ratio is 2.28, which improved with a 52% increase for current assets, mainly in cash, with 24% decrease in current liabilities. Next, quick ratio is 1.86 and cash ratio is 1.43, which are aligned with the current ratio. They proved Bloom Energy can sustain their business. However, its competitors have more liquid assets, so they can invest quicker and expand at lower costs. We believe that Bloom Energy's share price will increase 17.4% to $28.35 as base case. For the bull case, the price per share is expected to be $37.14, which is an increase of 53.8%. For the bear case, estimated price per share is $14.56, a 39.7% increase. These predictions are calculated using the 5-year DCF model as well as a 1-year relative valuation method with a PE multiple of 32.7. Both models are built based on present and future values as well as comparison with competitors.
Now, let's see the investment risks. The first one is high supplier bargaining power and competition in the industry. To cover this risk, Bloom Energy's product is unique due to its powerful generation, relatively lower cost of production, and use in multiple areas. The second risk is overestimated financial earning potential and undefined bottom line. Its EPS was overestimated for 3 consecutive quarters due to lower than expected negative earnings. Moreover, Bloom Energy always had negative net profit, which enhanced the uncertainty of its profitability. We believe an increase in the demand for renewable energy products and 10% decrease of cost of productions can prevent the risk. The third risk is the inefficient management of investment. This risk can be minimized with Bloom Energy's doubled manufacturing capacity and decrease in operating expenses, especially stock-based compensations. Bloom Energy has an experienced management team, with most members having over 25 years of experience in company management. The CEO, K.R. Sridhar, has worked in the NASA program. The board team has 44% of diversity, with an average age of 67 and a higher average tenure of 10.4 years in Bloom Energy, with a 78% of them being independent. Environmentally, Bloom Energy has a low CO2 emission, which means there are lower risks of conflicts when it comes to being a sustainable company. Then, their percentage of global emission impact versus grid alternatives has a minus 26.75%, which shows their efficiency of the product. Socially, Bloom Energy's marketing in partnerships means extra development on their products. Furthermore, they have aligned goals with their partners, such as becoming an innovative solution provider to accelerate the supply of eco-friendly and renewable energy from SK's Eco Plan. Their feedback from the public has also been well. There have been no illegal practices recorded which suggests they will not commit any in the future.